Hey guys, it's Karen. I'm just going to do a quick full market update. So looking at this recent price action of Bitcoin to kick things off, you can see we've been stuck in this range for a really long time, from essentially 4 or 5 weeks ago, it's 21st of June, and we've had this area of demand, this bounce region from around here between 29.8k to 30k. We have this area of resistance, this supply order block here between 31.4 to 31.6. And so I explained my short setup, which I caught in real time. I even posted in the Discord group. You could check the Discord group as well. And I entered the short around 31.573. And I also put my stop loss around 32.5. I wanted a wider invalidation in this scenario. And I still had that short intact. And I also have the short from 31.436 intact as well. So I had 3 shorts running. I hit my first take profit now at 29.960. And also, I slightly front run my second take profit at 29,630 instead of 29,500, and so now it's already a risk-free trade. And I plan to scale out on a grid as I posted in the Discord group as well. So I explain now what to expect next. So looking at this price action now, we've had so many hits to the upside now, and I explained a potential situation was a false liquidity grab of this low here, and false breakout and go back to the range. But things do look a bit weak here so far, but so far we're still above this key daily level. So if you actually go to the daily chart here, you can see how I mapped this daily level at this. I don't like the wicks, I prefer the open and closes, so I've put it in this zone here, so around this 29,872, because as you can see here, we had open and closes here, and we had wicks, so this is a key area of support here, you can see. And so far we're still above that. And for me, it's a valid long trade, and I've taken it and hit my first take profit just during the stream there now, so at 30,283, so I've closed off 20-30% there. So I've got remaining takes profits. So what are potential regions that the price can actually go to now? And what are some areas to keep your eye out? So we have some untapped points of controls. And these are essentially historic areas where volume activity is very high. And so the first one I'm looking at now is here. So this is essentially 28,871. This is a key untapped point of control, which is a path. If we break down, we will get tagged there. A potential scenario might be a breakdown, a grab of this liquidity here, and tap this point of control back into the range, and that might be a valid long setup. Again, it depends on the reaction. If we go straight past this wick here and it just grabs liquidity and just literally breaks on immediately, then you know not to open a long trade. The next untapped point of control of interest is this zone here. So 31,184 is an untapped point of control, and also you can see in this price action here, we have this huge imbalance. So we have this wick here and a wick here, but this is a huge gap. So the thing is, it's really, I can understand why you might not feel comfortable entering a trade, because you might get at least a recovery of this imbalance, at least midway. So I'm in a head short now, and I've closed at 40% of all 3 shorts. It's a risk-free trade. And I've also entered a long now at 29,892 just before the stream. And so we'll have to see how things play out. And if you go back in history, particularly these ranges, how long do these ranges last for? And you can see historically, the ranges can last often perhaps 3-4 weeks before it breaks down. Even this range, it lasted 3-4 weeks. This range, so from 23rd of January to 9th of February. So we keep seeing that, three weeks usually. And so this range we're in currently right now is a bit more unique, because actually now it's almost under a month now. And so you would expect a resolution of this range by the end of this week. And so that's just something to consider as well. And anything can literally happen. There's so many things to be careful of. And something else I want to also bring to your attention is this. So we have this, essentially this, the problem is a lot of people will be looking at this now as well, but what if you have some kind of ascending triangle, ascending formation like this? So you could have this, so a formation like this. And if I draw essentially one touch point like this, so one trend line like here. So you got this one, so it's like kind of like a macro ascending triangle. So like this maybe. And so what if we get another bounce, a dump here, and then we bounce again? And that might be a valid long setup. But then again, if we come down here and then break down and then retest it, that might be a valid short setup. So this is something else I'm also looking at to really be careful of. Of course, a lot of people are watching this trend line, so you have to also be careful that you might get fake outs. But that's something else I'm looking at. But so far, we're still stuck in this range between these key demand and supply areas. So I'm going to draw a fixed volume profile. So from this range, so from support here to this price action here. So far, we can see how this zone here between 30.7k to 30k is a high volume area. A lot of bouncing, a lot of volume here. And if we regain this 30k region and back test at a support, then that's a huge sign of strength. and potentially we get and that's why also I entered that long. I took my first take profit at this point of control, so it's a good first take profit hit. Next take profit for the long would be 30.7k, and of course certain other zones as well. So it's just something else I'm looking at. And so far, you want to try and trade at the extremes of ranges. And something else I want to really mention, guys, is that when we were up here, so many people were bullish. Oh, black spot ETF, and all this stuff. But the thing is that in trading and in general, there's no prizes for a lot of information. There's a plethora of information in the internet. The skill comes from being able to take all the information and process it, and being able to actually produce an actionable trade. And that's what makes money, not excess knowledge. There's no prizes or reward for that. And second of all, the main edge there is having access to information the quickest. But for us, TA is essentially the chart tells a story. We can see that. So looking at the wider market, starting off with Dixie, the US dollar index, you can see how I've drawn this channel now from just a macro channel from lasting decades, and you can see how we've had a couple of touch points here, a deviation play, and another touch point here. So now what expects? The dollar does look a bit bearish, as you can see. I would expect a tag of this weekly level, so 98.2. And if you actually put in the MDX algo, and you can see MDX algo supply and demand. So let's have a look if there's any bounce regions in that. And if you're interested in the MDX algo indicators, you can check in the description below. Join an amazing community of like-minded traders, just bouncing off each other's ideas and just really, really fast track a trading career. And on top of that, you get these amazing indicators. So the key area of demand here is essentially between 97.6 to 98.44. So this really aligns with my weekly support regions. So that's just something I'm looking at. I like that confluence. So there's very little on the way. The only thing now is I explain how. So I'm going to actually remove this one now for now. But you can see how we had that touch point. So first touch point, and then we had the touch point. So you might get nothing obviously goes down a straight line. So you might get a retracement and then a move. So that the general conventional wisdom is that if the Dixie is going to go down here, that might really benefit risk on assets like Bitcoin and other equities. So that's something also to consider as well. That's something I'm really watching. Then also looking at certain other things, the VIX quickly. So the VIX generally also has a similar inverse correlation. We noticed how particularly in 2021, once VIX was at support here and had a bounce, this was essentially roughly marked the top for the equities and crypto. And then once it's bounced, all the other risk on assets started to bleed. So far, we're still below this support here. So let's see if we get that snap back up, or do we just go back to this support area here? The US 30 is something else I'm looking at. So I'm in a short still. My invalidation is quite wide, but my exit is, I'm scaling out various take profits. So far, I've scaled in now, and we'll see how this plays out so far. And it's all about good risk management. Then gold. Gold is something I actively trade as well in the 1 minute chart mostly, but looking from a more macro point of view for gold, I would expect a tag of this. I would be surprised if this is the local top. I would expect eventually a run up to tag one of these key Fibonacci, so like maybe 2.2k, and then we might go back into the range. So we'll have to see how this goes. And so far, I expected a bounce to this, and so far we're still above that key zone, that 90.23 level. You know, I'm really watching for something like this. Like in 2018, we had that final run up and then a breakdown. So sorry, this happened in 2018 to 2019. So it's just something else I'm looking at as well. FTSE, nothing has really changed. We had that key level here, and we had a tag of that. We had a false breakout back into the range, and then a retest. You could have shorted that. So that's just beauty how TA works in anything. It's beautiful, right? NASDAQ, this is an example of setup that I planned, but I didn't take in the end because I marked that key level, but then we literally went straight past that resistance. And so if there's no reaction, no trade, simple. SPX, just look at it quickly. So this is a setup that I've actually planned, but again, I've not entered it yet because I explained how we have this volume profile, particularly in this zone here. So between 30.8k to 4.1k, but we actually pushed above it and then back tested this support as support, really, this level. But then we went charged pretty much straight through 4.3k with really little resistance. And so you would expect at least a tag and a local rejection around this 4.458 point of control zone, but we actually initially rejected of it, and then we back tested this almost slightly flat around this weekly level, and now we're charging forwards and upwards. So really speaking, there's very little to this resistance here, so 4.6k. So I would expect, potential setup might be a run up like this and a grab with this liquidity and then back into the range. And that might be a valid short setup. So for me, I'm not short of this yet, but I've just planned my setups in advance. And if the confluence is aligned, then I might take the trade. So total crypto market cap hasn't really changed. We are now at the 1.16 trillion region. So that's something else to look at. Then The Bitcoin dominance is also very important to look at. So we explained how this was actually a local area of supply. We expected a local resistance because on 2018, 2019, we actually had a run up. All this run up here, we actually backtested the zone of support. But then, and here we went straight past it pretty much. But this was a key area. And so it's not surprising to see that we at least had this tag, this local resistance around this 52 to 51% region. It's very, very expected. Nothing goes up a straight line. But the only danger I'm saying here is this. So when you look at this, you can see how we had this trend line going back from 2016. And the second touch point, was here 2020. And you might get a final one eventually. So we might get a local pullback here, but then move up like 57, 58%. So the question is, does it go up to 70%? I don't know, but I would expect at least this zone here, 58, 57. And you don't want to be the wrong end of that, because if that happens and you're holding a huge bag of altcoins, then you could get completely wrecked because it's losing Satoshi value. Yes, of course, some altcoins might go up in terms of dollar value, but if your altcoin is going up in terms of dollar value, but it's losing Satoshi value relative to Bitcoin, then there's not really any point, is there? So that's just something else also to consider. But guys, thanks a lot for watching. Do check out my YouTube channel. This is where I post my passion for crypto and trading and really tips to improve your trading and investing career.